Good afternoon, everybody. I'm Stuart Elliott. I'm the editor-in-chief of The Real Deal, and I'll be your moderator this afternoon. Today we have a panel on foreign investment, and we're specifically going to be focusing on Chinese investors. We touched on it briefly in the last panel, and Chinese investors have pumped $3 billion into the New York real estate market in the last year, and it appears to be just the tip of the iceberg. Clearly, they're the biggest investors in town. And we at The Real Deal broke news last week that not a single one of the city's 7 largest new condo projects underway is being financed by domestic banks today. It's all foreign money. This is all part of a historic East meets West shift. We're building a trade route for the flow of capital between China and the US these days. And it's home buyers, institutional investors, developers, it's all sorts of money. And the bridge is still under construction. The EB-5 visa program has emerged as a major source of funding, for example, but there are still some issues there. But the potential is massive. As Amir, publisher of The Real Deal, mentioned in the previous panel, The Real Deal is holding an event in Shanghai in the fall, the first ever showcase of US properties there. And staying in Shanghai, from my hotel window, I could see a row of skyscrapers that stretched the length of 3 Manhattans when I was over there recently planning for the event. The amount of capital is enormous. We'll touch briefly on other countries, but the big focus today will be on China, and I'm excited to be talking with our impressive group of panelists. They come from diverse backgrounds. We only have 45 minutes, so let's get to it. And I'm going to be introducing these guys, and you can just raise your hand when I call your name. It's a lot like grade school. First, John Lang, Managing Director of U.S. Operations for Xinhuan. Be prepared that I'm going to butcher every Chinese name I come across today. I didn't study Mandarin growing up like kids today do. So John helps lead a Chinese company that has been a pioneer in New York City. They were the first Chinese company to buy a major development site here in Williamsburg. They were the first Chinese real estate company to be listed on the New York Stock Exchange as well. Next we have Nick Mastrani of the U.S. Immigration Fund. Nick has been called the go-to leader in the field of EB-5 funding. The program, for those that don't know, is where foreigners invest in a real estate project to create jobs and get a green card in return. All told, Nick has raised $1.4 billion in EB-5 money for game-changing projects like Barclays Center in Brooklyn. Thanks for joining us, Nick.
You're welcome, Stuart.
In addition to Nick, we have a Nikki today, Nikki Field of Sotheby's, and she's one of Manhattan's top brokers. Her listings currently include a $66 million penthouse at the Puck Building in Soho. She's been building her Rolodex in China since 2008 and has a team to target Chinese buyers. And last year, a good portion of her $300 million in sales were to Chinese buyers. Next up is Mona Shah, who is a principal of Mona Shah and Associates. Mona is one of the preeminent attorneys dealing with the EB-5 visa program today. She has also been a leader in all facets of U.S. immigration law. Welcome. And finally, I'd like to introduce Jeff Dvoret of Quafu Properties. I think I said that right. And Jeff was hired away last year from Extel Development, which is, of course, building some of the tallest towers in the city right now. So you know it must have been good. You know it must have been a good opportunity for Jeff. Quafu is doing condo and hotel projects in Hudson Yards and on the Upper East Side. Welcome to all the panelists, and my first question is for Jeff. Why go to work for a Chinese developer? What opportunities did you see? Did you get tired of working for Gary Barnett? What was the reason?
Well, we'll start with an easy one. So I have the utmost respect for Gary and the Extel team, and I'm still in great contact with all of them over there. I think that, you know, whatever statistics we can cite about the current investment level of Chinese capital coming into the United States and New York more specifically is exactly like you said. It's the tip of the iceberg. It is the front end of the wave. So as I look forward to the future, there's a lot more of what's happening today happening in a year and 5 years. And for my own personal career, I said this is where I want to be. I want to be on the front end of the curve.
So if we saw $3 billion in investment in New York City from Chinese in 2014, what, if you had to just wildly guess, would it be over the next couple of years? I mean, are we going to see a double, triple? there was one story that said $50 billion over the next several years. Is that plausible?
I mean, that's obviously a big number. I'm not an economist, but I think that it's clear based on the number of meetings with investors that we see and take on a daily basis that there's a lot of capital that wants to be in New York if the deals are right and the terms are there. So I think it's more of a function, and as I think about it, that it's less about the want to be here, and it's more about finding opportunities that fit the investment criteria.
John, you are one of the pioneers, as I mentioned, in terms of Chinese companies coming to New York City. That initial land buy you did in 2012, which was the first major buy of a Chinese developer in New York City, now houses the Houston condo project in Williamsburg. Has it paid off being a pioneer so far? How's that project doing?
I think the timing was perfect in 2012 because that was right at the end of the global financial crisis, and being the only New York Stock Exchange listed Chinese developer, we found a very brief window of opportunity at that time, because on this side of the ocean there was a tremendous need for foreign capital, and valuation had come down dramatically. And 2012 is also the year where a new trend just started in China that is what the Chinese government is calling 走出去, which means going out, both from a personal wealth perspective and also the institutional perspective. So we seized on that opportunity, and we brought cash with us. Not a lot of companies had cash at that time in 2012. So we bought the property from foreclosure, and we were able to close it very quickly. And immediately we assembled a local team. This is the key of our success so far, which is being localized. Right now, the project turned out to be a tremendous success. When we started pre-sale by the end of last summer, we started at just under about $1,000 per square foot on average. Right now, we already sold about half of the units, a year away from the final delivery, both in China and here in the United States. And right now, the starting selling price is about $1,250. So we saw a 25% increase just over the last 6 months.
That's great. The big question for me is, are you getting Chinese buyers to go to Williamsburg? What percentage of your buyers are Chinese nationals?
In the beginning, our target was a third being sold in China, and 2/3 being sold here in the U.S. And last time I checked, that math worked out perfectly without us intentionally, driving that ratio. But given the fact that New York City is the capital of the capital of the world, the composition of the buyer locally is also very diversified.
And how big is your list of potential buyers in China? That seems like this fabled holy grail type document that all the Chinese developers have. Well, we have a list of 10,000, 100,000 potential buyers, people worth north of $5 million in China. Is that something how deep is your list?
Well, one of the trends that we observed in the last couple of years is the buying power in the middle class has increased significantly. So now we're not only talking about the super rich in China, we're talking about the vast, still emerging middle class in China. Every time I go back to China, people ask me 3 questions. One, how do I send my kids to a U.S. school? My time, 20 years ago, I came here to go to college, and then I was the oddball because most of the Chinese students came for postgraduate study. But now it's down to the high school level, right? Number 2 is how do I buy a house? Number 3 is how do I get a green card? And the people who are asking these questions are not just rich people. They are, middle-income people.
And Mona, we talked before the panel, and you didn't like it when I said that someone told me that big money is already out of China and it had already fled to Hong Kong and other places. And you were saying you're not seeing that, A, and B, you're seeing demand from different areas today.
Yes, thank you, Stuart. Yes, that's correct. When you said the big money's out of China, I disagreed with that. Where if you're going to talk about Hong Kong and what happened when the British handed that back, that was 20-something years ago now. And the emergence, as we've just heard, of the middle class is significant. People who bought real estate in Beijing are able to come as EB5 investors here, just refinancing their real estate alone. The South has seen a tremendous change in the GDA and the GPA, the actual type of investor who comes in. And I would say that the vast majority of investors are people who basically are coming in because of their children. The children want an education here, and when it used to be the college, we are seeing something very different now. It's getting younger and younger.
And you mentioned something about second-tier cities as well.
Yes, that's correct. At one time, if you wanted to go get money out of China, you would go to Beijing and Shanghai and maybe Guangzhou. We hardly touch on the big cities right now. Right now, I was just there just a month ago, and I'm going again next week. It's all second-tier cities, smaller cities.
So what's happening in the big cities? Is that the landscape's different than before?
No, it's still there. It's just that I believe that the reach of EB5 has stretched out. And second-tier city people do have the same kind of income or more, and they are able to go think about EB5.
Interesting. EB5, the visa program that we mentioned before, it's been such an engine for New York real estate. It's provided funding for Hudson Yards, Atlantic Yards, many projects. It's coming up for federal renewal, and Mona, you told me that people are pissed at New York. So I was wondering what the landscape's like, and maybe Nick, you can weigh in on this too for renewal and what's at stake there, what it's looking like, what it means for the market.
Well, just to cut for a second, Stuart, I mean, EB5 is the whole of the United States, but right now I can tell you 70% of the investors, wherever they come from, whether it's Brazil, whether it's China, whether it's India, whether it's the UK, they all want to invest in New York. And it's kind of obvious why they want to invest in New York. And for that reason, yes, there has been professional jealousy, for want of a better word, from other states who want to squash New York's success in EB5. I think Nick could elaborate.
Yeah, well, I think what's happened is it's become a New York-centric program, and many of the urban cities, Miami, San Francisco, LA, it really people they know these cities, so they're attracted to these cities, but they're also a lot smarter now than they were. Back in 2009, 2010, people didn't really know what EB5 was, what the projects were. We and some others have kind of introduced some major developers into the market, Forest City, the Durst Organization, so on and so forth, the Witkoff Group. And what they do is they Google people. They find out, their history, their success record, their track record, and really they kind of really, that's what they're drawn to. So they're drawn to the bigger projects, the longer track records, the more successful people. And as Mona said, the second-tier cities and the third-tier cities have really opened up as the news kind of spreads out into the other areas in China, and it's really it's become quite a organized program in China.
I think I'd like to also add that the Chinese investors are a very sophisticated person now, unlike it was a few years ago.
And is there oversight of EB5 is an issue to some people? There's concern about among some Chinese of projects getting funded with EB5 and not getting built, which would mean an investor would lose their money and not get the green card that they paid the money for. Does there need to be more oversight? Are Chinese doing more due diligence than before? What's sort of the landscape there?
Yes, Chinese are doing a little more due diligence, but in a slightly different manner. What we are seeing is that every time there is a project, the actual people will not rely on the American counterpart going across to America. They want to come over here and visit it themselves. It's easy for them to get visas, it's easy for them to ask around, so they are doing their own due diligence, but at the same time, they're using, I would say, more local knowledge, and it really goes beyond, without a doubt, that you can't compare, for example, a hotel in the middle of Manhattan to a hotel in a street in Wisconsin. You just can't compare.
For some brokers out there, this might seem, if you're not involved in working with Chinese buyers, this might seem abstract or at a distance. So Nikki, my next question for you is, how did you get your start with Chinese buyers? Was it all about introductions? How do the brokers out there go about making this happen if they want to try and turn their business a little bit more towards Chinese buyers?
Well, I think for most of the people that are in this room today, they're probably already way ahead on this. If you haven't recognized that the Asian market is a opportunity for you in your career, you're not ahead of the game. In 2008, we started traveling because there was nothing to sell here in New York in 2008. We did a couple of worldwide tours. I was fortunate enough to be able to do this because I have a team here in New York, so they were mining the non-business that was happening in 2008 and our anxious clients. But it didn't take us long to discover that Asia, mainland China in particular, was where the demand was. What do? And it's not a big secret, but we hooked up with bankers and wealth managers here on the East Coast. They made introductions to wealth advisors and bankers in Asia. We popped in to the banks and their offices. They would have a long line of their clients that had already discussed with them the diversification of their portfolio. Most of them had their funds outside of the country, offshore already. So it was not difficult for their credibility to be transferred to myself and my team. And all they were looking for is opportunities, and the best opportunities that we could provide over and over and over again were right here in Manhattan. What are the two things the Chinese were looking for in 2008, 2010, 2015? Brand, prestige. So if you could give them something with a brand or prestige at the upper tier of the market, and that's what my remarks are about, it is a home run. For those new buyers, and again, I'm talking residential real estate. I don't know how many residential brokers are in the crowd here, but we're in the trenches. We wake up every day just thinking of a way to make a deal to sell some of these magnificent properties that we're so fortunate to have in our town. But the middle tier now that we're seeing emerge, and clearly in the boroughs, is a whole new skill set. It's a different type of buyer. It's a different type of approach. It's different research that they've done, and you need to be a little bit more able to pivot, considering how you would have handled the upper tier high market buyer.
That's interesting. And you also, in terms of setting up business, you hired somebody over from one of the banks, right, to start your team, your Chinese team.
Yeah, always get someone who's smarter than you. One of the great assets we had in 2008 through 12 was a senior executive at HSBC. I know HSBC is in the house. I'm sorry that you lost Daniel Chang, but he was working with us to make these introductions. It soon became clear to us that he had a great ability to get us in front of the people that we needed to. So Daniel's come over. He now heads our China desk on the field team, and he does a lot more of the traveling than I need to. What are we doing? We are finding opportunities at all different price points in all different locations in order to fulfill the needs of these very diverse portfolios. Here's something that's really interesting for us all to focus on, and I'm sure my expert panel here knows this, but roughly 24% of the average Chinese millionaires financial portfolio is in residential real estate. That's a big number. The second highest grouping for that type of participation in residential real estate are Americans, and they have an average of 11% of their financial net worth in residential real estate. So this is a big market, it is a growing market, and it's a market that's looking for us, and we're so fortunate that we have these opportunities.
And getting back to John and Jeff, you're working on projects today, obviously. It seems like there's a lot of demand to do more projects. Where are you looking in terms of, project type, condo or hotels, et cetera, and also geographically? And second question, who's doing the wooing these days? Are the American developers wooing you to do JV deals, or are you wooing American developers to do joint venture deals, or are you trying to not do joint venture deals? And Jeff has had some problems with one of his U.S. partners that the Real Deal's written about. He's not going to comment on it today. It's subject to litigation. But what's your general take?
So I think to answer your second question first, there's a lot of wooing going on, generally speaking. There's a lot of foreplay. So I think that it's an exciting time in the market for a lot of reasons. And I think people are still trying to figure out the best way that they can participate and they can play. And not everyone has had the the head start that John's organization's had or Nikki's had in terms of building these relationships. Our organization is young in the sense of all of us working together, but it's an amalgamation of some very seasoned professionals who have very deep relationships back to China on the capital side, in New York on the development side. So I think that the where we're looking is really in some parts driven by the market, and it's in some parts driven by our investors as well. And I can't probably fully give the audience here the size and the breadth of the Chinese market that we've seen and others have seen, but to say that our investors are interested in only residential properties at the highest end on 57th Street, or to say that they're only interested in entry-level price point would be doing a disservice to the size and nature of the Chinese market. I think that yes, they're interested in both of those things. I think that there are some locations that seem to resonate a little bit more than others do. I think prime midtown properties, whether they're on 57th Street or east and west, are very attractive. I think that we have other investors who want to be able to get in and more at the ground level and are willing to look at multifamily developments in suburban locations. And I think I've been personally very impressed and a little bit surprised by how sophisticated and how deep the market is for really all of these different kinds of asset classes.
And it's interesting what you mentioned before about brand. You saw the Baccarat Hotel sell for $2 million a room. That was a record for a hotel's sale. Baccarat's a very powerful brand in China. Is that factor into your thinking at all, doing projects that you want to have instant brand credibility for Chinese buyers? Location seems like obviously another allure. If you're building with Central Park views, that's you'll be instantly trusted as a product because people in China would understand that. But does brand factor into your thinking going forward?
Yeah, I mean, I think that brand is always to some degree factored into our thinking just in terms of sound project underwriting. It's easier to sell a project, and I'm sure that most of the audience can comment on this as well as I can. It's much easier to sell a residential product that has immediate cachet by tying into powerful, well-known brands. I think that the Chinese market is particularly sensitive to these things, and I think that by putting these things together when they're possible, it makes a lot of sense.
And John, for the project you're doing in Williamsburg, did having a Dutch architect, somewhat of a star architect, in that project, did Chinese buyers understand that, or was that a factor?
When we bought the land, it was already pre-approved for in the local community for a relatively low-end development project. And then we immediately hired a local architecture firm, but also we agreed entirely with the cachet idea. we thought hiring some kind of a starchitect would bring the brand, some brand equity to the project. So, we approached Pete Boone through our marketing firm, and then Pete was immediately interested in in reaching out to the broad Chinese market. So Pete Boone is what we call a upgrade architect, or the branding architect, but he actually spent a tremendous amount of time designing both the interior layouts, the furniture layouts, and also the garden, the facade of the building, and the choice of materials. And also, to add a little cachet to the selling process, right now, this is a little bit of an advertisement. Anybody who buys a large unit, such as a penthouse or one of the townhouses, would get a free trip to Amsterdam to have a personal consultation with Pete Boone's team on the interior layout of that particular unit.
Yeah, nice. And it seems like when I was over in Shanghai recently, the amount of starchitecture there is enormous. I mean, I think it is probably greater than in New York. One question I had, we talked about it earlier. In 2012, that kind of opened up the floodgates for Chinese money coming to the U.S., some of the regulatory changes in China. Now on the U.S. side, there's an amendment to the Foreign Investment Real Estate Property Tax Act, which is a mouthful, which could also have an impact. Can someone else describe it for me and talk about the possible impact? The law basically would enable foreign pension funds to invest in U.S. real estate without having to pay capital gains, is the idea.
Doesn't really affect, what we do on our side of the business. We deal with individuals. It's all syndicated, to individuals. Institutional is much different, which these guys deal with more than we do.
I'll take a stab at it. Investing in the U.S. property market started from buying a condo or a apartment or a house somewhere in Wisconsin. But over the last couple years, gradually institutional investment in the U.S. property market has been on the agenda. Most of the private investment in real estate is through private equity in this country. But in China, the idea of a private equity with all these jargons like carried interest, waterfall, is so foreign to the typical Chinese investor. So right now, based on my observation and my interaction with the Chinese investors, is from the institutional or family office perspective, there are two models. One is crowdfunding. One is what they call trust. I think crowdfunding is more attuned to the private equity model and is less regulated. The trust funds are heavily regulated by the state and only through state-owned financial institutions, but it's also focused more on the preservation of capital and a fixed income model rather than a all-risk equity kind of investment. This type of money right now is looking for opportunities here in the U.S. This is what I call the third type. The first type is the pure developers like us. The second type is large Chinese developers who team up with local developers, big name developers, and basically play a financial investor's role. The third type is the third wave, which is just starting, which is the what we call the institutional investors. And they are more interested in a long-term perspective. So they're not necessarily investing in condo projects. They're more interested in commercial real estate, long-term income generating, and can be leveraged by its cash flow.
Got it. So the purchase of the Waldorf Astoria by Angbang would be an example of that?
Based on what I know about that deal, I don't think holding a hotel long term is their goal. I'll just stop at there.
Okay, they'll probably develop part of that into condos is the idea.
May I just
Sure.
add to that? On the other side of John's case is the residential investor. When we first started talking to Asians that were interested in brands such as New York, a lot of the discussion around the banking table was return. They were really looking for those numbers, and at that time we could at best offer 3. Generally it was around 2.5, 2 3/4. So it was a discussion and gave them pause. Since 2012, we get into these meetings and we're never asked about return, which also means that there's not a lot of talk about cap gains. When they're buying residential, the Asian mentality, and it remains to be proven, is not about reselling the project. They're buying it for themselves, they're buying it for use, they're buying it for their family, they're buying it for wealth securitization, they're buying it so their 20-year-old son at Yale can have a crash pad on the weekend. But they're not thinking about selling it. Cap gains, although it's reviewed with them, is not an issue that seems to concern them. So that's not.
Yeah, and that seems pretty integral to the Asian American approach to property in general. I mean, if you look at Chinatown, downtown, so little turnover of buildings and sales happen because the mentality is hold long term. And how much negotiation do you see among Chinese buyers, Nikki? What's sort of the mentality there when you're dealing with Chinese buyers versus other nationalities or types?
Well, for all of you that have worked with Asian buyers, and again, we're generalizing here, and that's the topic that we're speaking on, and certainly not all of them, but it is a long, sometimes torturous, beautiful choreography. It is the great, well-honed art of negotiations that we Westerners know very little about. New skill sets when negotiating with Asians. The deals are moving a bit more fast and furious. By furious, instead of it taking a year, they're now moving at 4 to 6 months. But it is a very, very, very interesting and respectful cultural element that even the youngest Asians are very well honed on. And our job as residential real estate brokers is to prepare the other side. I was just talking to Gary Barnett on a deal that we're doing at 157, and we talked about the ebb and flow of negotiations, and Gary's had far more experience than most of us in this room, but he also recognized the fact that it was not going to be a 3-round deal. It was going to pass through Easter, Mother's Day, possibly Memorial Day. I'm hoping by July 4th we'll be celebrating. But if you are not really clear on how you're going to be negotiating with an Asian, learn very, very quickly, because if you don't participate in that ballet, it's a very, very difficult deal to close.
And it seems like it's so relationship-driven doing business when you're in China. When I was over there recently planning for a Real Deal event, the rounds of dinners and lunches and meeting many, many times to have personal rapport with somebody before you engage in actual business, it just seems like that's a very big piece of the process. Would you agree with that?
For the Chinese, my feeling is business is life and life is business. It's very integrated. Their family members, definitely their children who come to literally all of the meetings and showings. There's a tremendous amount of entertaining, I think somewhat like Mad Men did in the 50s, where everybody went out for their martinis at lunch and continued after work entertaining their clients. We're back to that. Why? Because it's about building a relationship. It's very, very, very important that these relationships are grounded in a knowledge of each other. Three outings with my Asian clients, and it's time to bring in my husband, my children, my mother-in-law, my housekeeper. They want to know everybody, and it's important that we know all of them. I think that the relationship-driven business is also a very integral part of successful closings.
So that's the residential side. Mona, we talked about this before. On the EB5 side, Chinese are the biggest participants in EB5. You mentioned one advantage there is that there's a quicker turnaround time with Chinese when it comes to EB5, paradoxically.
Yes, we've worked with many different countries all over the world, and the speed of money coming in from China is not even twice as fast as everywhere else. It's much faster. But then the Chinese are old hands at this. They've been going out to Canada for years and years. The rest of the world are relatively new and are still learning. As I said earlier, the Chinese investors are very sophisticated investor. And quite frankly, EB5 and residential do go hand in hand for many reasons. You have to understand, a lot of these people who are the new EB5 millionaires coming into the United States are people who have attained their wealth through not just hard work, but through buying real estate in certain areas, seeing that real estate grow. Prior to the 80s, nobody could even buy real estate in China, so it is a relatively new concept.
Right, right. That's an important point. And where do you see, we'll touch on the world outside Chinese investment, where do you see the next biggest EB5 investors coming from in terms of other countries? Where is it growing? What's changing, Nick or Mona?
Well, you know, I mean, Asia is the biggest producer of EB5 capital. You know, it starts with China. Korea is also a very large market, as is Taiwan. Hong Kong has now recently become active in the market as well. You know, there's a lot of activity in South America. But, you know, I think the reality is people are flocking to China because it's the most developed immigration program, you know, in the world. I mean, they've been immigrating, as Mona said, to Australia, New Zealand, you know, all over the world for many, many years. The U.S. program has become extremely attractive and very well understood, you know, in that market.
There is a difference, though. There's a different type of investor. An investor who might come in from South America may come because they often come because they want to live in the United States. The investor from China does not necessarily want to live in the United States. They are getting the green card for their child, perhaps just to get them, let them get employment. And once a U.S. citizen, then it's very easy for them to travel around the world, which they can't do with a Chinese passport as easily. So the goals are different. That's why you'll see the numbers being different. When somebody is moving across forever and ever, they think about 20 other million things. Somebody's just investing for a green card, which is another document. It's much faster.
And what percentage of all EB5 is Chinese now? Is it 70?
85%.
85%? Wow.
Yeah.
Wow. And
It's huge.
do you think that'll go up or?
I don't think it would go up. I think other countries are coming very much, you know, they're coming up as well, but it's not going to match China. There's no way. Because as I said, the goals are different.
And Jeff, we talked about branding before as a factor in some of your projects. What other sort of amenities or ways that you shape your project do you do to cater to Chinese buyers? I mean, do you skip having a fourth floor? Do you feng shui is part of it? What sort of factors in there?
You know, I think it's an important point to think about is that we're not designing our buildings for the Chinese buyer. We're designing our buildings for everyone. So, you know, to the extent there are things that we can do that make the project more attractive to the Chinese audience, then we're happy to incorporate that as we think about it. But, you know, I think that one of the things that we've seen is that, you know, for the most part, the Chinese buyers don't want to come and buy and live in a Chinese building. They want to come, they want to be a part of New York City, they want to live in an international building, they want to live in a building that New Yorkers want to live in. So I would say we try to do things to make it a comfortable experience for them, but really we're trying to design a project that fits well into the fabric of New York City so that the Chinese purchasers who want to come purchase here feel like they're buying a piece of New York.
Got it. And are you seeing a change in terms of flow of buyers as a result of two sort of broader macroeconomic things in China? One being the slowdown in the housing market there, and I guess more politically, the crackdown in corruption in China. Is that, what do you think will be the upshots of those two things happening in China in terms of investment here? John, do you have or Nick?
I can tell you from our standpoint that the government has changed its philosophy a few times over the last 5 or 6 years, and every time they do, it affects the market, it affects the mentality, because a lot of the investors our government officials or work for state-owned companies or state-owned enterprises. And, as the government cracks down on these officials, it absolutely affects the market tremendously, actually. And I'm sure they see the same thing on the real estate side.
Yeah, and I can add also that as far as the second-tier cities are concerned, which is the area probably you didn't expect before, there hasn't been a single agent who hasn't approached us in one way or fashion or another to show that there's one investor who's interested in EB5, but they also have 10 million they want to put somewhere. That conversation is becoming more and more common. Everybody wants to try and get some money out for a safety reason, if nothing else.
I guess the question of whether it will impact the market here is whether it gets out fast enough, right? I want to open it up to questions. We have a couple more minutes. Any questions in the audience? Yes, sir, right there.
Thanks. Nikki, you mentioned that there's a new type of Chinese investor that you're seeing, more of like a middle tier rather than upper tier, and you said that they have different needs and might require like a different type of service. Could you elaborate on that? How do you tailor your service specifically towards that segment of Chinese buyer?
A great question. When I referred to the earlier phase one Asian buyer, for us in luxury residential real estate, these were families that had been afforded great wealth for quite a while. Their cash was mostly out of China, offshored in many different places, making this wealth for quite a while. Most of their children had already been educated in universities on the East Coast or in Europe. They were ready to adapt to Western business style customer. Why? Because many of them had been working in Western business environments for quite a while before they were investing in significant real estate. So they already understood you have to do the deal quicker, you have to be a bit more transparent, you can't have that ongoing, excruciatingly long negotiations. They had adapted. But what happened in starting 2012, when there was so much money and so much power coming from that great wall of cash, they did not have to adapt to Western economic styles or our time frame or even our communication abilities. They're doing it their way. And if they're not going to do it their way, they're going to do it with someone else. So to answer your question exactly, we really have to respect their way of purchasing, which means a tremendous amount of research to be provided, a tremendous amount of support for the position you're taking. Because after all, when they're buying, it's often only about the comps, right? You really, truly have to have those comps inside and out. They will have better comps than you. You have to do more research, and you have to find a way to bring them around to what is going to be acceptable on both sides. The most important thing with dealing with the second tier, I believe, is preparing the sellers and the sponsors or developers at the other end for this new type of buyer. And I think if you manage expectations on the sales side, we've had a lot more success in making the deal. I hope I answered your question.
All right, I think we have time for one more question, and then if you have additional questions, you can just come up to the stage later and ask. Right over there.
Hi, thank you for your speeches. I would just like to ask, there was a recently article in New York Times about shell companies and how foreigners are buying estate under an LLC. Can you just elaborate about how many of these are Chinese and what are the reasons and how is it regulated if it is?
Good question. So the question was about the preponderance of LLCs and how that's regulated. Are you seeing all Chinese buyers buy under LLCs? What's sort of the mechanism? Or do they buy under their real name? Wait.
Yes, in residential, absolutely. That's why condos are the game.
LLCs, yeah.
Absolutely.
We have a lot of buyers buy through a LLC. They just don't want to show their name on the paper, you know.
Well, yeah, it's interesting. I mean, the Times had that 6-part series about buying through LLCs, and the interesting thing about that is, on the one hand, yes, it can be used to hide money or hide names. On the other hand, it's pretty widely used across the board by everybody. So it's kind of how you look at it, I suppose.
It's not an anomaly for Asians. There's literally no buyers out there right now that want to do co-ops. They truly, whether they're young, old New York, old school, they still want to spend confidentially, smartly, and have some flexibility.
Well, I want to thank our panelists. These guys are at the forefront. They're at the forefront of a pretty historic change in what's happening in real estate, but just more broadly about the flow of capital across borders. And it's been a pleasure to have them today, and thanks again.